came out, and I had a moment of realizing, okay, 6 months of my search capital is gone. I'm no further along than I was. What am I going to do? And so I think that was probably the most terrifying moment.
Yeah. Welcome to Found and Funded, the Entrepreneurship Through Acquisition podcast for searchers by search experts, where we explore the route to business ownership without having that $1 million idea. I'm your host, Carl Lundberg, CEO at Carl Lundberg and founder of the ETA Awards. Now let's get into it.
Shit.
Yeah,
Again,
yeah.
I had some really harebrained plans about how I was going to come back from this that thankfully, again, going back to the investor help, thankfully some of them talked me out of it. He called me and he was just like, what the hell are you thinking? And I was like, you're right. This is a terrible idea. Thank you so much.
Today, we're going to talk about a traditional search fund with an expert who has been through the process and successfully acquired a company. I'm joined by Adam Johnson, the now CEO of Water Direct, and we're going to run through the process from start to finish and get a bit of background and a bit more intel from Adam about what makes a successful traditional search fund entrepreneur. Adam, great to have you on.
It's good to be here. Always happy to talk search. So my search journey started about 6 years ago. But I started my career in startups. So I out of uni, went out to Palo Alto, and this was in sort of 2011. Early sort of stages of what became a very long sort of BC boom, and I was just sort of taken with the whole startup idea.
Yeah.
And so went out to California, founded an early stage startup called WePay, and that was sort of the beginning of things. I didn't really have an end goal other than just to get experience, and through that, I ended up sort of determining that sort of entrepreneurship was something that I would want to do eventually. So I spent the next few years there. I ended up sort of shifting a little bit. I moved to a Belgian telecoms company as the second employee that they hired in the U.S. And went through quite a growth journey with them. We were bought by a private equity company in London, which sort of shifted my focal point from sort of VC into a different type of funding and growth.
Yeah.
And it was sort of through that experience that I thought, okay, maybe at some point I'll do a startup, but maybe there are other things out there that I want to explore.
Yeah.
So I ran the U.S. entity for that company for a number of years. I ended up sort of deciding that telecoms wasn't the route that I wanted to be sort of permanently on. Like a lot of people in that position, I went back and did an MBA here in London at London Business School. And it was there that I was introduced to search. And I think, like most people, it sort of ticked most of the boxes for me as someone who knew I wanted to do something entrepreneurial. Yeah. Saw the wealth creation opportunity, frankly, of more private equity type transactions. Yeah. And you know, possibly solve for me not having the greatest idea at that point in time. So typical sort of search fund checklist of like, yes. Yeah. And here we are today.
Yeah.
So.
But that's absolutely the beauty of it, isn't it? You know, you wanted to do something entrepreneurial, didn't necessarily have the idea at that time, and then came across search at the right moment. Often it's the people teaching the classes at the business schools that actually initially bring people into the world of search, right? And perhaps also introduce them to investors and so on. How did you take that step then from being an MBA student and then graduating from your MBA to actually doing the rounds, finding investors, you know, and establishing the search fund?
Yeah, I mean, I from the time I read the case and sort of was introduced to this and realized, okay, this is, like a lot of people, probably something that seems slightly too good to be true. I thought, well, you know, let me take, you know, as much of the next sort of, at this point it was the first semester of my second year in the MBA, you know, take as much time as I can to try and understand this. I had a bit of serendipity in that a friend of mine from undergrad in the U.S. Had gone to Northwestern and was probably 3 years ahead of me in sort of his MBA journey. And I one of those people who you sort of didn't really keep in touch with, but follow on LinkedIn or whatever.
Yeah.
And as I sort of was following him in his journey, he'd done his MBA, and then all of a sudden was a managing partner at a fund, and I was like, this doesn't make any sense, And when I read the search fund case and sort of was introduced to search, it clicked that maybe this was what he was doing. So I reached out to Will Wright, who he ended up buying a company in Texas and running it, and just sold, I think, probably about 6 or 9 months ago.
Nice.
And just asked him for some advice, and so he introduced me to sort of how the search world worked, sort of on a high level, and that was sort of the start of the snowball for me. Introduced me to a couple of names, not necessarily to investors, but just some names, and sort of gave me an insight into the community of investors that exists in the search world. And then obviously having gone to LBS, Simon Webster is a key player in certainly in the UK search market, and I think I reached out to him maybe directly. I ended up interning for another searcher, Raja Prasanna, when I was in my second year. And yeah, it's just, one by one, sort of talking to these people and getting an understanding of the fact that search, historically at least, has been a fairly closed community.
Yeah,
it's a hard nut to crack.
Yeah.
And you really have to sort of pay your dues and do your time to get into it, which I think is a good thing. But yeah, I spent the better part of my second year just kind of obsessed with it.
Yeah, brilliant. Okay, and I suppose speaking to a friend who's out in the US, doing a search out there, and I guess getting some intel. What I've found in the search space is that everyone's very helpful. Most people are helpful, collaborative, willing to offer advice. So I suppose, I'm assuming he gave you quite a lot of advice, information he's identified, but then I guess when you try to apply that or turn back to the UK, did you find it actually quite challenging, the differences between the markets and the maturity of search in the UK versus the US?
Yeah, I mean, when I started my search journey in the UK, it was and still is a much less mature market. I mean, the network of investors that exists to support search funds in the UK, not just as a search fundraise, but as a mechanism for completing a transaction, is just, it's much less mature. So I think I took a sort of much more global approach to sort of networking, and obviously being American probably helped with my tapping into sort of the American investor base to a certain extent, maybe just if not to be able to relate quite easily.
Yeah.
But also there's lots of investors obviously in Spain and in Germany and all over continental Europe, and so I wasn't at the beginning sort of super focused on making sure that I had just sort of a UK investor group.
Yeah.
But I think the perception of the UK as a market for search at that time was pretty poor.
Yeah.
I think there was a perception, there had probably only been 10 or fewer sort of traditional search funds done in the UK, and the sample size there is obviously not statistically significant, but I say this quite publicly, like there were a lot of very smart investors who were making very sort of like hardline determined decisions based on an entire country's position as a search fund market based on 10 data points. Yeah. So I tried to not be dogmatic about it, and took a slightly more maybe skeptical approach to this, but clearly there had been deals done and it had worked.
Yeah.
It was. I guess I knew that it would just be a slightly different experience. You read the Harvard Guide to Buying a Small Business, and like we don't have SBA loans in the UK,
quite.
So it's a different
huge barrier compared to the US.
Yes.
Yeah.
I knew that it would be different, and I knew that I'd have to sort of maybe take a few extra steps to make it work.
Yeah, got it. And I think the UK in particular, there's a lot of factors to consider, some pros, some cons. The market actually, the available to buy businesses or businesses that are coming to the point where actually succession is going to be required is pretty big.
It's huge,
particularly for the size of the country. But then we've got political issues, Brexit, and other things, and then of course this small sample size where people can say, well, I can't point to a realistic guide of what returns I can expect. So I guess it was a far bigger challenge to do it in the UK because there's more uncertainty and you're going to have to convince more people that it is the right place. So that does naturally lead into the question of why did you do it in the UK and not in the US?
Yeah. Well, I mean, I'm sure, like you, I speak to a lot of prospective searchers, a lot of people who are thinking about doing this. And, there's always a question of, do I do it with a partner? Do I do it on my own? Where do I do it? Do I have an industry thesis, or do I go broad? Do I do a brokered search? I do it, all of these sort of seemingly binary questions.
Yeah.
At the end of the day, you can build economic theses around a lot of these things, but in terms of where you want to do it, I think that's probably the variable which is most personal. You're going to have to ultimately, move to a place that's in reasonable distance from business.
Yeah.
And so I was thinking of it like, look, even if I have to move from London, if it's Manchester or whatever, I'm a 2-hour train ride almost anywhere in the UK back to London. Yeah. If I am in the US and if I'm going to be genuinely open-minded about, looking for the best business and depending on where, frankly, I didn't want to end up in, no offense to people in like Nebraska, but that wasn't for me, So I think it ultimately is a really, really personal decision that you have to be confident about making.
Yeah. I think that's really good advice actually, because as you say, people can get bogged down in looking at economics and political stability and all these other factors and actually probably don't think that, this is a long-term journey, and you need to be happy as well.
It won't work if you're not happy.
Yeah,
it really won't. Yeah. And I think it's not the only factor, but it is a very, very important decision. And to your point, it's a very long journey.
Yeah.
I've been on plenty of panels and in plenty of classes, and whether it's Simon or somebody else teaching the class. I tend to always get a nudge before and be like, emphasize how hard this is and how long it is. Yeah. Because it's, it's not like you're just going to get a job for a year or two.
Yeah.
This is like minimum, 7 years of your life. So it's important to consider that.
Yeah. Yeah. And not an easy 7 years. And we can come in onto that a bit later. So you go to business school, you find out about search, you become obsessed with search as I have, and I think a lot of people do. And then you take the leap, you go about fundraising. We've talked a bit about that, but ultimately, who made up your cap table? Is it the traditional search fund investors? Is there a mixture? Are there family offices? Are there kind of UK investors that you've educated about search?
Yeah, I mean, winding back the clock a little bit, I was fundraising in 2019. So, a lot's changed in those 5 years. So most of my search cap table was sort of names that have been around for a long time. Yeah. At the time, and I can happily name a few names, but the likes of Istria, who are now perceived as a really established brand name in Europe. I mean, they were still relatively new. You know, so I guess at the time maybe a mix of up and coming search, but who would now be considered probably more traditional names.
And you mentioned a bit about support from investors. And I've had lots of conversations with investors about their preference for investing in traditional search, the Stanford model search versus self-funded deals and other type of sponsored deals and stuff like that. And I think there's quite a few factors in the traditional search model that, if you stick to it rigidly, actually are quite different from self-funded and some of the other type of situations that we see nowadays. And one of them is that, and I've been told this firsthand, that people like to see fairly fresh MBAs. Now, of course, benefit in your case is that you had a decent career up to that point, then did your MBA, so a great candidate. But they like to see fairly fresh MBAs, and they like to provide input. Now, I'm sure some people want more input than others, and I'm sure some investors give more input than others. And just wondering how you've found your investor base to be. Have they provided the input you want? Have they wanted to provide more than you've needed?
If I could turn back the clock and sort of start fresh with my cap table, I don't know if I would have. I don't think I would have made very many changes to my search cap table. That is.
Yeah.
I think any any searcher who is ultimately successful in what they do has to first recognize what their shortcomings are, especially if you're doing it as a solo searcher.
Yeah.
I didn't have a finance background. You know, okay, fine, I had, you know, P&L responsibility, but I had no, I just didn't, I couldn't build an LBO model. It wasn't in my skill set.
Yeah.
And, you know, similarly for somebody who's coming into this, you know, having come from private equity, who, you know, thinks, you know, I've got this in the bag, I know what I'm doing. There's a whole other skill set that you might not be familiar with, which is, you know, sales and marketing and running sort of an ops process.
Operations.
That you need. So I think, you know, identifying and being really self-aware, I suppose, about, you know, where your shortcomings are, ultimately should lead you to be able to say to your investor group, look, you know, I either don't know how to do this, or I need support in doing this, or can you point me in the right direction of some resources that might be helpful. And so I think investors can only be as useful to you as the questions that you bring them or the challenges that you request help on. And so for me, I would say at the beginning of my search, you know, there's a lot of pressure to go to your search investor group and sort of provide, you know, monthly reports on what's going on. You know, I've reached out to this many people, and frankly, the investors don't give a shit.
Yeah.
I don't know if I can say that, but I did. Most of them don't care.
Yeah.
You know, they care when you get to the point, and they want to know that you're doing work, right? I mean, obviously, you know, they're probably not going to be supporting you if you've raised a few $100,000 and you're sitting back doing nothing. Okay, fine, they might care then.
Yeah.
But as long as you have a process, as long as you're putting, you know, one foot in front of the other, they care when you find a business that you're passionate about.
Yeah.
Or when you find a business that you're passionate about, that they might want to step in and say, whoa, you've got it wrong.
Yeah.
You know?
Don't like that.
Yeah. So once you've found something, you know, that's the point at which I think investors, A, are interested, and B, can provide really good feedback. Like, you know, the getting the sales and marketing engine up and running at the beginning of your search, I'm sure for those who don't have that skill set, there's absolutely some great resources amongst investors who can say, you know, use this tool, use this approach, whatever it might be. But the real value comes in assessing the businesses that you find and being welcoming to challenge on whether or not something's, you know, good or bad. But yeah, I would say generally speaking, you know, my investor group, I'm so grateful to most of them. You know, people who, you know, don't have to give the time to somebody who's, you know, on their own journey, but are very willing to. And I think that's, you know, there's a lot of discussion right now, especially as the search community grows, about sort of the old guard, and frankly the slightly dogmatic approach that I think the old guard takes to a certain extent. But it's worked for them, and there's a reason for that. And I guess, you know, from my perspective, most of my search cap table was more old names, and genuinely they were you know, willing to give me the help that I needed. Yeah. So I have nothing, frankly, but good things to say.
That's great. That's brilliant to hear. So you said the word. I think you said the word daunting. One thing that occurs to me, you know, particularly as a solo searcher, is taking that leap. And I think there's a couple of stages where you probably, there's threshold moments. Closing your search capital and suddenly being there with a pot of cash that you've gone round and asked people to give you and trust you with, and then closing the deal and thinking, right, okay, now I've got to deliver on the whole thing. Your experience actually is more operations based, as opposed to kind of that deal process, which in my opinion is far better, right? The operations timeline is longer than the deal piece, the search piece. What bit, if any, did you feel most daunted, most alone, most scared or anxious?
Yeah, to be honest, like when you're in the midst of the deal, I think the adrenaline gets rid of that. Yeah. You know, there's certain, don't get me wrong, there were moments when my deal died 3 times, you know, and in those moments it's like, well, shit.
Yeah. What
again.
Yeah.
You know, the deal is daunting 100%, but I do think there's an adrenaline bit of bit of medicine that takes care of that to a certain extent.
Yeah.
It's really in the moments during the search, where you've been working so hard to try and get deal flow. You've been having conversations with I don't know how many business owners, and you might find yourself in a moment where the momentum seems gone. And I had one or two of those moments. I mean, my search was weirdly timed. I started the search properly in January of 2020, so COVID hit 2 months later. So I had 6 months really of just absolutely, really bleak deal flow. But anyway, I sort of reached the end of that first 6 month period of panic. I mean, the world stopped basically.
Yeah.
And came out, and I had a moment of realizing, okay, 6 months of my search capital is gone. I'm no further along than I was. What am I going to do? And so I think that was probably the most terrifying moment.
Yeah.
And trying to take a step back. I had some really harebrained plans about how I was going to come back from this. That thankfully, again going back to the investor help, thankfully some of them talked me out of it. I remember Jamie Turner. I will never forget this. I was going rock climbing, and he called me, and he was just like, "What the hell are you thinking?" And I was like, "You're right. This is a terrible idea. Thank you so much." I was going to bring on a partner mid-search. It was just, you can find yourselves in moments of panic, really, and it's in those moments that a more seasoned investor can sort of pull you back.
Cool ahead, and so that's another place where the investors have really added value. So
Absolutely.
Settle you. Keep at it. Trust the process.
That's right.
Yeah, great. And so your deal then, obviously, you ultimately you identified Water Direct. I think we know, people who have been through the process know that you've got to kiss a lot of frogs to get there. I expect. Was there how many kind of businesses did you get close on before you found this one?
I signed 7 LOIs in the process, of which 3 were sort of, let's give this a go. I mean, not particularly. 2 of them for sure were not serious, and I say that knowing that I don't know, it might be a tactic that's well received or not, but just to get my feet wet, frankly. And then there were there was one business that was a broker deal that I really liked. It would have been a great business, still is, I'm sure. And then I had 2 others before I found Water Direct that I sort of moderately was interested in.
Okay.
And then but so 7 LOIs before that. I couldn't even tell you how many businesses. I mean, hundreds.
Yeah. That's how it works. Yeah. And so Water Direct, you identified, was that a brokered deal?
No, it was proprietary. So
nice.
So going back to the sort of moment of despair post-COVID, sort of settling a bit, and post some of my investors pulling me back from the loony bin, I basically thought, look, okay, we have a time crunch now, and the only way that I can increase my odds is to increase the top of the funnel if I can. I mean, try and keep the funnel as sharp as it has been, but we need to find a way to increase the top of the funnel to just increase our odds. So I say ours, mine. And so I came up with this plan to hire 8 to 10 interns. Each of them would run a search sort of in parallel in a specific industry. I had an intern who had been with me for most of the COVID period, ETA, what's up if you're listening, who was really diligent and super helpful. And I basically said to him, look, if you can sort of document the processes really specifically, and then if you could manage the interns, I'll manage the deal flow and we'll go from there. So we made this work. And sort of November, December time of 2020, this sort of intern engine started running.
Nice.
And so one of the sectors was waste management, and Nico, one of my interns, was looking in the waste management sector, and he turned this company around called Country Style. Country Style was a part of a group. And I had an intro call with the people, and typical sort of first step, whatever. And I was doing my research on the company, and I realized, okay, it's owned by a group, so not a traditional target.
Yeah.
But I had a quick look, and the reason it sort of came through the filter is because the group is owned by a single shareholder. So there's basically this shareholder built the core company, and they started buying up other businesses.
Yeah. Okay.
So it wasn't completely far off. It wasn't sort of a corporate group that we were looking at. It was a single shareholder, single decision
Still owner
makers.
managed.
Absolutely. So I thought, well, okay, maybe this might work. And in my research on Country Style, I quickly realized Country Style was not, it wasn't going to be the business for us for lots of reasons. But there was another company in the group that I noticed, which was Water Direct. And so in that first conversation, I said, look, I mean, I don't think the company that we reached out about is actually going to be, right for us, but there's another one that we'd be interested in talking about. And he said, well, it's funny you should mention that because we'd be open to that. Okay. So that started the whole discussion.
Stars aligned.
Yeah.
Yeah. Brilliant. So then you started that process, I guess, from that conversation to closing. What was the sort of time period you looked at?
So that first conversation was in February of 21, and we closed the deal on March 4th of 22. So it was a long process. And yeah, I mean, it was long for a number of reasons. I mentioned the deal died a few times. Water Direct, not just for the reasons that it had a slightly unusual ownership setup, but it also had a much more volatile revenue profile than most search deals. So over, if you take a 3-year view, you have up and to the right. If you take a 6-month view, it looks like runaway. Yeah. And so, basically, I had to get comfortable with the industry dynamics, and the industry dynamics of what we're doing are really particular. We don't have. There's very few other companies that specifically do all of the component parts of what we do, so it's hard to get comparisons. The UK water industry is a weird beast to try and wrap your head around for lots of reasons. And so I had to spend some time on the front end really getting comfortable with, for me, the critical variable is this industry growing? Most search investors will use that as a first hurdle, right? Is the industry growing? And it wasn't clear. And so I had to get really comfortable understanding the dynamics of the use case for the service that we provide. And once I got comfortable with that, all of the other things, I was able to see a path to making them justified.
Yes.
And so over the course of the year that we were trying to do the deal, there were 3 moments where a pretty critical sort of variable that most investors would look at fell off. Right. Yeah. So, we're looking at revenue year on year in October. It's like 30% of what it was last year.
Yeah. Wow.
So that goes to valuation, right? And we have to renegotiate. And it was in a moment like that where I realized, look, there is a genuine, there's a genuine question about what the actual value that we're willing to pay for the business. Yeah. Any transaction like this, you're going to have moments where you have to question that. Yeah. I had to walk away and say, look, we cannot justify paying you what we originally thought we could because of what's happened. So it took a long time, and it took several renegotiations, but ultimately, we had we could see the value. The seller had a genuine reason why they were interested in offloading the business, and made it work ultimately.
Was there were there any issues getting the debt funding comfortable with the kind of the volatility in earnings?
Yeah, it's an interesting question. I mean, the debt was less of a challenge in the original deal than I would have expected.
Okay.
I think the business had been around at that point for 26 years. There was some pretty good signs that over the longer term it would be fine. Yeah. Okay. And I think if you think about debt providers in the UK, obviously they're traditionally extremely averse to MBI risk, and so coming in with a search deal is I think we're getting over that a bit, but
we're making some progress.
But at the time it definitely, there were some raised eyebrows. I have to say, I credit getting the debt funding across the line in a way that didn't actually want me to sort of jump off a cliff, to two things. One, a counterpart at the bank who was absolutely fantastic. Adam Aegis was working with me at Shawbrook. He was my counterpart at Shawbrook at the time, but he was fantastic, and I think we both. He bought into the story. And I think ultimately that's what it takes.
It's so important because they're your advocate.
Absolutely.
To credit.
Absolutely. Yeah. And so we, I spoke to Adam every day probably for 6 months. He was probably ready to like throw his phone away. But we were on the same page, and we were both excited about the business. And I think that's true for whether you're debt fundraising or whether you're equity fundraising. It all comes back to like, can you tell a story with industry data, with company data, and do you believe it? Yeah. And if you believe it, other people should be able to get their heads around it too. Yeah.
And are you being objective in your assessment?
Yeah, absolutely.
Or have you, there's a lot of people who get into a deal and then think, well, I've come this far.
Absolutely.
The sunk cost fallacy.
Yeah. Well, that's what I was saying. I mean, we got to a point where I had to walk away, and I did, which was like I might revise my answer actually. That might have been the most daunting.
Okay, right.
The most daunting moment. Yeah. Because of the sunk cost fallacy, of course, right? So, but I knew that I wouldn't be able to raise on that valuation. So when we had to renegotiate, that was challenging. But I think it gave a signal to the bank that we're looking at this seriously.
You're scrutinising it and taking it seriously. Yeah. Great. Brilliant. Well, look, ultimately you got there in the end, right? So you agreed a deal. Yep. Quick question actually before that is, how much of your cap table in the search followed on to the deal?
Yeah. So this, from my story at least, this is, I think, kind of an interesting path to go down. So because of a few things I've already mentioned, it was the ownership structure was kind of a bit left field for some investors. The recurring revenue profile was certainly not as high as most traditional search investors would want. And it was just a bit of a niche asset. I think it took time to wrap your head around. So I had 14 investors on my cap table. The other thing to mention before I talk about sort of the follow-on is the check size was relatively large for a search deal. So I found myself knowing that I was going to have to raise quite a bit of money. Yeah. And I think going back to sort of the makeup of a search cap table, I think making sure you've got some institutional capital that can pull out the firepower if need be is important. So I had a lot of uphill challenges sort of in front of me in that 7 out of the 14 ended up buying into the deal, so I had 50% conversion rate. Okay. And then I convinced a number more of them to roll their original equity rather than me paying them out, which was very kind of them. Yeah. But I did, that 50% really translated to slightly less than 50% of the equity. So I had a huge equity raise to sort of undertake. I ended up, my now biggest investor is Ethos. So I was their first sort of search transaction in the UK, and very similar to a number of the other names I've mentioned. They bought into the story quite quickly and got it. So I think that was a benefit of having a slightly non-traditional search investor to come in who had maybe a slightly more traditional sort of UK private equity view on things, right. Looking at the asset and saying, great asset. We have to wrap our heads around this, at that time, 30, however old I was at the time, 30, 32. Yeah. That's a bit wonky. But I had, plenty of meetings with them. I think I get along with Ethos guys super well, and we made it work. But yeah, it was... The equity raise it was a really challenging bit of experience, and I think the other thing which we can get onto later is board makeup, which maybe was more challenging than the actual fundraising.
Okay, well, I can look forward to that bit. So, but look, I've interestingly, just coincidentally, have spoken to some of the people who were invested in your search capital who didn't follow on, and I think it's safe to say there's not one of them that thinks they made the right decision. Let's
the beauty of hindsight, and you just never know with these things, right?
Yeah.
So.
But what that tells the listeners, the viewers, is things are probably going pretty well. So what if we talk about kind of post close now and kind of what it was like in the first few days and first few months and how things are going?
Yeah, I mean, so stepping into a business, I mean, you can intellectualize those first moments as much as you want prior to, but it really can't prepare you. I mean, sitting in a room of these people in Water Direct, one of the big sort of pros in my mind was that I think the average tenure of employees when we bought the business was like 8.5 years. So people stuck around for a long time. So I'm sitting in this room with a bunch of people who had been there for a long time. They had been through the group that we bought it from. They bought it from the founder in 2014. Most of those people had been there prior to the group owning the business. So, they're a part of the furniture. They you've got some guy coming in who doesn't know anything about, at least really didn't know anything about anything at that point. And those first 100 days, it's such a balance between, trying to, the traditional search community talks so much about humility and humility being a key to success. And I'm fully bought into that. But there's a balance to strike between coming off as, I don't know everything yet and I need you guys to guide me, whilst also trying to establish credibility.
Be the boss.
Yeah. So I think it's the friction between those two things that's the most challenging. Obviously, you're drinking from the fire hose at that point too, trying to just take in as much as you can. Yeah. In our case, I was, very, very literally drinking from a hose, maybe not a fire hose, but a big water tanker. Yeah. And in my first 6 months, I mean, not necessarily the first 100 days, but we had that first summer. I mean, the business responds when the water infrastructure fails. And water infrastructure can fail for any number of reasons, but typically if there's an extreme weather event, it causes for the pipes to burst and treatment works to fail and whatnot. And that summer, if you recall, was the hottest summer in history in the UK. And it was a very prolonged drought. There were some very, very serious incidents, and I was sort of thrust into, from not knowing anything about this and trying to establish my credibility to being on the phone with regulators, trying to understand, like, does this country have any more bottled water left? So it was a very, very swift, out of the fire into the firing pan, or what?
Out the frying pan into that one. I was going to say in at the deep end.
Yeah, exactly. So yeah, I think for me the benefit was that I didn't have, and this is probably true of every searcher who jumps into a company. You're not going to have a bored moment. You're not going to be for lack of things to do. But it's a massive mindset change, right? From going through the search to operating and trying to manage all those things is a challenge. But ultimately, I think if you've bought into a business, at that point you're so excited about sort of getting going that any of the challenges that could come along with it are sort of secondary. Yeah.
And it's kind of what you're there to do, right?
Yeah, absolutely.
And as you say, I think there's no mental prep you can do ahead of that time, because you don't know what's going to come at you, right? You can't prepare for it, because until you're there and it's happening, you don't know what it's going to be.
No. And going back to sort of one of your first questions, this is another point in the journey where investors, especially investors who have done it, can be really helpful. Just to give you some reassurance that, like, you're going to be okay. Yeah.
Well, that's a useful segue into perhaps picking back up on the point about your board, and who's on your board, again, not necessarily by name, but what the makeup is and how it came about.
Yeah, so I mentioned the board was a real challenge, and I think most searchers today, especially in Europe, are faced with the challenge of, okay, you're trying to get a deal closed. Most search investors want to know who's on the board. They want to trust who's on the board.
Yeah.
And we have a supply-demand problem here, where there's just simply too many deals being done, and simply too few people who have been in the community and who can sort of sit credibly on a board to give some comfort to investors. So that was my biggest challenge in closing the deal, was getting a board together that understood the company, because it definitely had some very specific dynamics related to the UK water industry, and I ended up bringing on a very non-search chairman to my board, a guy called Andy Smith, who ran Severn Trent Services and was on the board of Severn Trent for a long time. So very, very industry, very industry sort of oriented, experienced person. And then I have there's a few seats for Vrithos, who are the biggest shareholder, and then actually Istria as well.
Yeah.
And so it's you really have sort of like a few sort of quote traditional search investors. I've got my biggest shareholder who have more of a UK centric approach to things, and then I had an industry person. And whilst it was a challenge to make up that that composition in the moment, at the end of the day, I think it ended up actually being really good. It's a nice,
good mix.
It's a nice mix, and it's worked for us.
Yeah, great. We've covered a lot. I don't know if there's anything that you think we've missed that you want to get across, or you think will be useful for people to hear about.
Yeah, no, I think the only thing that I tend to repeat in whether it's a panel or a class or an interview or whatever, is that there's lots of different terms for this. There's search fund, there's ETA, there's all, and I think ETA encapsulates a lot of what, whether it's a traditional search, a self-funded search, or any other sort of mechanism for this. I'd like to remind people that the E is there for a reason. This isn't a formula. This isn't ABC criteria are checked off, and so therefore it's going to be like, it is entrepreneurship at the end of the day. And I think as more and more people get into this, I think it's important for the community to sort of remember that. And ultimately, it's, as the entrepreneur, you have support, and your investors are there to support you, your team is there to support you, but ultimately, it's kind of your show.
It's on you.
So don't forget that.
Yeah, great. No, that's really useful. So we tend to ask the same question to all of the guests we have at the end of each episode, and so the question is, who's taught you the most on your journey?
Ooh. This is going to be such a cheesy answer, but I'm going to give it anyway.
Do it.
My dad. My dad has always been an entrepreneur, and going back to entrepreneurship and focusing on that as a concept.
Yeah.
There are ups and downs in entrepreneurship, and so I watched throughout my childhood my dad go through an entrepreneurship journey that was successful and not successful, and successful and not successful. And so I've been very lucky to have him as somebody to sort of both tell me what to do, but also what not to do. So a bit of a cop out with my dad there.
Yeah.
But,
no, but look, I think it's a great answer. Yeah. So good. Well, look, Adam, brilliant to have had you on. Really enjoyed talking to you about it. As you know, I think both of us really enjoy talking about search. Anyway, I think you've provided a lot of really useful information for people, and it's really just interesting to hear about Water Direct and the great success story that it's been. Well, thanks for coming on.
Thanks, Carl.
Don't forget to follow us on LinkedIn and Instagram. On Instagram, we are at Found and Funded Pod, and do please feel free to comment on our Instagram, on any LinkedIn posts you see, to tell us if there's anyone that you want to see on the podcast, or if you've got any questions that you want us to think about, or any topics that you want us to discuss. We'd love you to get in touch. Please do not hesitate to get in touch with me. Connect with me on LinkedIn. Thank you for listening. Thank you for watching, and we'll see you again next week.